are financially independent, consider to take over the policies from your parents so that you manage your premiums and you can make the necessary adjustments to your coverage. Also, let your parents
take a break.
Rest. Take a breather.
Mom, you can take a break soon, yeah?
But for young working adults, right? Because technically, I mean, as we are like kind of fresh out of graduation, like our salary might not be very high at first. So, because I recently started to like track my own finances, I was quite shocked by how much I spend. It's like for example, like because I also pay rent, so rent is a big factor, like in terms of expenses, like rent, investments, like insurance and all that stuff. So for young working adults like us, like how much is recommended to actually go into our insurance, or like what kind of insurance is important at our stage in life?
I'll start with the first part. So a great starting point on how much you should spend on your insurance is from the Basic Financial Planning Guide. So it's available out there in the public from MAS, Money Sense and CPF. So they provide rules of thumb that you shouldn't spend more than 15% of your salary, of your take-home pay on insurance. Yeah, so let's say your take-home pay is 3K. So you shouldn't be spending for more than 450. And if you are, it's time for you to review your coverages to see whether you are paying too much for your insurance or you are overinsured. So or buying too many insurance that you don't need.
So at our level, what are the most like basic insurance policies that we need?
Most basic coverage that Gen Z needs to prioritize on is hospitalization insurance. So it's your integrated shield plan, so that when you are hospitalized and you encounter unexpected medical expenses from illness, from accidents, you are covered. Yeah, so it addresses this need, and you can manage all these unexpected costs, which can get quite high. And you already have so limited savings when you just started work. This kind of significant medical expense may wipe out everything that you have, but hospitalization plans can help you cover a portion of your bills and ensure that you don't deplete your hard-earned money. It also lays the groundwork for your future insurance needs. That's the basic that you have to cover for yourself. Then you see which life stage you are at. So if you are intending to start a family very soon, then term insurance for life coverage, to cover your dependents, your child, your spouse, those kind.
So like in the occasion, because like speaking about family, right? A lot of us, like our parents actually buys the insurance for us since the moment we were born. So in a sense, like kind of like built up the idea in us, like increase like the complacency. So we're like, oh, we already have then the question is then, do we still need to look after our like insurance profile? Like, do we need to look into it ourselves and like buy more insurance?
So are you one of the
Caught in 4K.
If you already have, do you know what you have? Or you just leave it?
I do know what I have, because I know I need to pay soon. I think today. Actually I need to pay today. Okay.
What are you paying for?
Yeah, so it's important. So even though your parents, you're lucky that your parents settle this for you, but you need to review your coverage and understand what you have. So relying on their decisions may not be the best approach for your long-term financial security. So I think that overall we should take ownership of our insurance, as it is an important step to becoming financially independent. So I think first of all, start with understanding your coverage. So know what these policies cover, so that in any event, you know whether you can claim or there's any exclusions. So it's the basic foundation to ensure that it meets your needs. And then because your parents might have purchased this very long ago, your needs might have changed since then. You need to review and make sure that you optimize the costs. But what this means is that insurance premiums can be very high. So at that point in time, they may have bought it through an insurance agent. Maybe a family insurance agent that helped to settle everything for the whole family. But I think for yourself, what you can do is you can research and compare the options out there and see whether you can find a better coverage at a lower cost. So take control of your insurance and make sure that the premiums spent is optimized and you're getting the best value for your money lah. Yeah, I think there's a lot of platforms out there, so like iFAST, Money Hour, all these portals that provide very transparent approach to how you should see and spend your insurance. Yeah, it's a good starting point lah. See whether you have any gaps in the coverage also. So maybe your parents have been focused on making sure that you have life insurance, but neglected on the CI, critical illness portion, yeah, which is also important. Yeah, so you can have the payout when and focus on your recovery. Yeah, in terms of getting any CI, touch wood. Yeah. So make sure that you know what you have. Then when you are financially independent, consider to take over the policies from your parents, so that you manage your premiums and you can make the necessary adjustments to your coverage. Yeah, then also let your parents
take a break.
Take a
breather.
Take a break soon.
But I'm also quite curious, like for life insurance, right, is it actually necessary to get it immediately after graduation? Because I mean, for families, like let's say if you are going to have a family soon, then I understand. But after I graduated, then I met some of my FA friends. Then they tell me, you should get life insurance. But is it actually needed? Like after graduation, like immediately?
I think many people like myself have existing whole life policies from our parents. So do you have a whole life plan that your parents maybe they are sleeping?
I don't think so. I have zero insurance from my parents. Yeah.
But for your parents, are you the single child or you have siblings?
I have a younger brother, but I know he has insurance. But I think once I bought my own insurance in Singapore, then they stopped all my insurance back in Indo.
Oh, yeah. Okay. So your circumstance is
a little bit
quite
different lah. Yeah.
It boils down back to your financial circumstance lor. Yeah, whether your parents rely on you on the income. Yeah, but life insurance also has this component that when in the event of terminal illness, you get the payout. I think you can see it as a way that you can have this sum of money that you can enjoy in your last days. Yeah, so you can consider term insurance, but I think you don't have to buy like super big. For a start, right after graduation, when you just started working, there's no need to lah. There are a lot of options out there whereby you can get very affordable ones, so you don't need to pay a huge sum for life insurance actually. So in fact, on iFAST we have this iFAST digital term, which is from my team lah. And then we have things like Compare First as well, where you can get direct insurance. So because it cuts off the distribution cost and all, so you can really find very cost-effective insurance options. And the most important thing of why they reach out to you to buy your insurance now is because you are still in the pink of health. Yeah, so it can be challenging and expensive to buy insurance if health issues arise later on. So you secure the premiums at that age, then you stick on that premium, avoid all the exclusions lor.
Generally, in conclusion, you should get insurance while you're still in the pink of health.
Generally, it's like that. But you don't have to over-insure yourself.
So like we talk about like overinsured. So like how do we like avoid like overspending on insurance?
Like I mentioned back then, you need to understand your coverage. So know what you are paying for, and know what is the coverage that you need. Yeah. So I think insurance documents, policies can be very complex. Comes with a lot of pages. But it's still crucial for you to understand what you're covered for and what's excluded and what is the claim process. So, but not to worry, because there's resources out there that helps to simplify all these complex terms. So Money Hour actually has this website that helps you keep a lookout of the policy. They shortlist some of the plans and review and tell you that this plan is good for what, not good for what if you're looking for certain needs. Yeah. So I think that can rely on such resources where they do the legwork for you to make it easier for you to understand your coverage. Then secondly, it's to separate insurance and investment. Yeah. So why is it that we should keep our insurance and investment separated? Is that we can choose the best insurance coverage for our needs and be able to invest the money the way that we want, that aligns with our risk tolerance and financial goals. So pay close attention to the distribution fees, lock-in periods. Yeah, because unlike investment, you can take out whenever you are satisfied with the profits. But for ILPs, or this it typically has a lock-in period, and you lose on the opportunity cost when there's a investment opportunity that comes in. Yeah, so separating these two, insurance and investment, gives you more transparency and control. And then compare and explore affordable options. So don't settle for the first policy you see. So compare from the different insurers to see whether you can get better coverage or better premium. For example, for iFAST, some promotion. Yeah, we actually not just on the compare part for you to get the cheapest premium, we have this commission rebate program whereby we rebate a portion of our commissions received from the insurers back to our customer, so that you can plow it into investment. So it's credited into your cash account, and then your cash account, if you just leave it there, you get interest on the either monies, or you can just use it for investing in ETF, stocks, unit trust, or with debit card you can just use it to pay for your straight from the cash account lah. Yeah, so that's one of our USP. Also, we rebate a portion of this commission back to the client. Yeah, and with this you can have the flexibility to invest with what you are comfortable with.
So this commission rebate, basically users can reinvest it or like use it for like spending and all that stuff.
Yes.
Wow.
Yeah, because it's in your cash account, you can do whatever you want lah. Yeah, so that is our USP.
Time to step up our insurance
Correct.
planning then.
Go home and check it now.
We put link here. So do you have any last few tips for Gen Zs or young working adults to be more financially savvy?
For those Gen Zs that's not in the finance industry, start to invest early, so reap the rewards of compounded interest. Yeah, so the earlier you start, the more time your money has to grow. Yeah. Have you started?
Yeah.
Good. But you started before your internship, or?
I started before my internship. Although for a while, like cause I went overseas, then my money went a bit like, but like starting to like grow again. Yeah, so I'm very happy about that. I see the bank account like
Yeah, so I think you're also prioritize on experiences. So I think don't, because you want to save, then you forgo the experiences. So if you were to spend, make sure that you spend it wisely. Can use things like tools to help you maximize your rewards. So for instance, for me, I get the most out of my finances. So I don't track every transaction meticulously, but I maximize the rewards for each card. Yeah, so for miles, I use this app called Hey Max AI. Have you all heard before? Do you all have any miles card?
I have.
not at the moment.
Okay, so you can consider installing this app. It helps you track whether you have maxed out the spending for that month, or get the most miles lah. So because some cards, there's a cap on the miles that you can get. So the app helps you track your spending. Then shop back. So link it to your card, because you can get cashback. Yeah. So, and the good thing is that from what I read online, it says that it still tracks the underlying. It still links to your card, the underlying MCC category. Yeah. So you still can clock the rewards for the card. Yeah, without compromising. Just have to link it. Then when you are shopping, keep track of whether the shop back button, the green thing, little savings comes a long way. But don't make yourself very miserable, like having to compare and always just to save that few cents lah. It's the habits.
So at the end of the day, it's kind of like really striking a balance between financial responsibility and also enjoying life a bit, and like not to save or invest until you like suffer that suffer that amount.
Yes.
Yeah. So for all the young adults out there, go and get yourself insured, invest early, but also like enjoy life lah.
YOLO,
Yeah,
but
like-
not YOLO too much.
Yeah.
Maybe 75% YOLO.
Yeah, I guess like also spend kind of like below your means a bit, and also avoid overspending on non-essential so that you can prioritize on like long-term
Correct.
financial goals. Yeah, so thanks Karen for coming down for this podcast. We have a lot of insightful discussions, and see you guys for the next episode. Bye bye.
Bye.
You edit.
Yeah.
Okay. Yes.